So you think you know what's going on between the US and Iran, right? You've seen the headlines, the missiles, all the military posturing. But what if I told you that's all just theater, that the real war, the one that actually matters, is completely invisible? It's not being fought with weapons. It's being fought with something way more powerful.
And that's the key thing to get here. Yeah, the missiles have stopped flying. For now. But the war? Oh, it hasn't stopped. Not by a long shot. It's just shapeshifted. It's moved off the open seas and into the hidden corners of the global economy.
This is what experts are calling a cognitive war. It's a battle that's not fought for territory, but for perception. It's all about diplomacy, economic pressure, and, just really clever messaging to shape reality itself. And here's the crazy part. Wall Street is buying it hook, line, and sinker. They're betting big on a diplomatic breakthrough, but they are completely missing the real story. And that story is all about illusion and deception.
All right, so to really get why Wall Street is so off base, we have to peel back the first layer of this whole mess, and that is the diplomatic deadlock. And I want to be super clear here. This isn't a negotiation. This is a standoff where both sides are basically demanding total, unconditional surrender. Just look at their starting positions. The U.S. rolls out this 15-point plan, which basically demands Iran dismantle, everything. Its entire regional influence, its nuclear infrastructure, the whole shebang, and Iran. They come back with their own 10-point plan that says, sure, right after you guys pack up and leave the Middle East entirety. See what I mean? These aren't starting points for a conversation, they're ultimatums. It's a non-starter.
So with the military option kind of stalled out, the U.S. has shifted gears. Now the strategy is what you could call an economic siege. They're using a total blockade of the Strait of Hormuz to try and force Iran's hand. But here's the thing. This move is a massive double-edged sword. It's not just hurting Iran, it's causing absolute chaos for the entire global supply chain.
Okay, so how is this complete and total deadlock being hidden from the markets? How are traders not seeing this? To understand that, we need to rewind to one very specific day, April 17th, 2026. Because in the span of a single hour on that morning, the entire story, the entire narrative around this conflict got flipped completely on its head. It was amazing.
Just look at this timeline. It's wild. At 8:45 a.m., boom, Iran's foreign minister posts that the Strait of Hormuz will be, and I quote, completely open. Just 5 minutes later, the U.S. president unleashes this machine gun burst of tweets claiming total victory. And by 9:30 a.m., less than an hour from that first post, the global markets are in an absolute frenzy, pure optimism.
And it all came down to that one phrase, completely open. That was it. That's all the market needed to hear. For a trader sitting at their desk, that sounded like crisis over, time to buy. And it triggered a massive, massive financial reaction.
And when I say massive, I mean it. The impact was instantaneous. Global oil prices just cratered, dropping 14%. And the S&P 500? It rocketed to a new all-time high. Think about that. It was a victory won not with a single missile, but with a few carefully chosen words on social media.
But, of course, there was a catch, a huge one. See, Iran's definition of open and the market's definition of open were two completely different things. The market heard unconditional free passage for everyone, but what Iran actually meant was a managed opening, where ships have to follow their routes, pay fees to the IRGC, and coordinate with their authorities. It was the same word, but it described two totally different realities. A classic cognitive trick.
And this is where it gets really interesting, because this illusion, this cognitive trick, brings us to the most critical, most overlooked part of this entire crisis. We're talking about an invisible barrier here, one that no peace treaty, no tweet, no announcement can just erase.
So let me ask you this. If the US and Iran actually sign a peace deal tomorrow, that's it, right? Crisis over? Everything goes back to normal? Well, you'd think so. But the answer, surprisingly, is a hard no. The reality is way, way more complicated than that. And the reason why has to do with something called war risk insurance. Now, this isn't your normal insurance policy. It's a super specialized thing that covers ships and cargo from, acts of war, piracy, terrorism, and it is absolutely non-negotiable. If you want to sail into a high-risk zone, you have to have it. And if you can't get it, or if the price is just astronomical, well, your billion-dollar ship and all its cargo just stays put. It creates its own kind of precision blockade, but it's not made of warships. It's made of paperwork and risk calculations.
I mean, just look at what happened in the Red Sea for a perfect example.
After the Houthi attacks started, shipping volume just fell off a cliff. And here's the kicker. It has never recovered. Not really. And it's not because ships are still getting hit. It's because the cost of insurance skyrocketed and made the entire route unprofitable for most companies.
So it literally doesn't matter if the missiles stop tomorrow. It doesn't matter if there's a ceasefire. If a handful of actuaries and underwriters sitting in offices in London don't believe there is long-term verifiable stability, those insurance rates are not coming down. And resetting their global risk models, that's not a switch you flip. That can take months, sometimes even years, of proven total stability.
And this is the paradox we're living in right now. So while the entire world, and especially Wall Street, is waiting for some big diplomatic handshake, the global economy is actually trapped. It's caught inside a three-layered economic siege. Let's break it down. Layer 1, you've got the US blockade, which stops any ships that are even remotely related to Iran or paying them fees. Layer 2, you've got Iran's blockade, which stops ships that don't use their designated safe routes and pay their fees. And then, Layer 3, you've got the wild card, the persistent Houthi threat in the Mandeb Strait, which just creates this baseline of permanent chaos. You put all three together, and what do you get? A triple blockade. It's like a compounding global tax on absolutely everything: energy, food, technology. And it's a tax that grows every single day.
And that brings us right back to where we started, the markets. Wall Street looks at this situation and sees a pricing mismatch, a golden opportunity. They're betting the farm on a diplomatic breakthrough that, well, it just hasn't happened. And what's worse, they are completely, utterly ignoring that giant insurance wall that makes a real recovery impossible, even if a deal was signed tomorrow. It's not just a miscalculation, it's a dangerous delusion.
So that leaves us with one final, pretty unsettling thought. The market is desperately looking for a path to peace, for some visible sign that things are getting better. But what if the real crisis, the one that's going to stick around for years, is the one that's totally invisible, the one that's being fought not on any battlefield, but in the fine print of insurance policies, in complex risk models, and in the battle for our own perception of what's real?